let's hit record. There we go. And in case you didn't notice, Dale,
Yeah,
for some unknown reason, all of a sudden my camera,
all of a sudden you're in San Francisco.
yeah. But the camera hasn't worked in 4 months.
And now it's working. Okay, well, there you go.
So all of a
Mir-
sudden.
Miracles happen.
And John, I also don't know. It's a new name. I did see it on the on Discord. And actually, he came on to the call early before I had changed it till now.
Okay.
Also, we had both Russ and Hanley come with questions, which is great.
Okay. Yeah.
And they were looking at, both of them were interested in oil, and Russ was interested in the S&P also. So I think that what I'm going to do is go to the oil. And by the way, just we'll get to the real guts of it in a little while. But Dennis sent me, Dennis is the individual who does the futures trading.
Oh, yeah.
He sent me a very interesting article, which is copied onto the silver comment in the letter. And what's interesting about it is that there's evidently a huge shortage in physical silver. I mean, a huge shortage. And he, goes through all of the numbers over the past several months. And it's really gotten pretty dramatic as far as a decline. And so, last week, gold was down $45. Silver was up 61 cents. And not only silver, but platinum also. The gold was the only real member of that group that was down. So, okay, can everyone see my crude oil chart?
Yeah.
Great. So what I'm thinking in here is several fold. Number one, that the government, in its zeal to put a floor under the oil, came out with a comment, I think it was Wednesday, that they were going to buy to replace from the Strategic Petroleum Reserve at $80 and below. I don't know if it was just a poorly worded announcement, in which case I would say, if it were me, I would say we'd like to think about being a buyer under $80, because frankly, it could be 75 if there's no support for it underneath this market. I mean, looking at it, we have the 130 blow up high and a pullback to $90. So that's $40. We only rallied from that $92 up to 120. So lower high and only about $30. But when we break through here, regardless of which way you try and figure it out, an extension to the downside on what is considered a measured move would give us $70. But they seem to, they put it in, and everybody that I saw talking about it for the next 2 days was all about, well, now they've put a floor under it at 80. So we'll have to see if it works out. As has been the case historically, capping a market never works. Just like wage and price controls never work. You know, by the time they get around to doing it, it's so overvalued, and they basically, you know, put a bottom under it. Now, so we have all of this, we have this breakout right here, which was the first time it broke above 80 after the horrendous last April, 2 Aprils ago now, I guess, where the expiring contract went to negative $40. This one shows a low only of 6.5, which was actually the next day. And the reason for the discrepancy, which is $46, is the fact that the expiring contract had no limit, because it was essentially a cash market, because it was literally the last day of trading. And so these never got down that far and started up. So, but we have a $6.5 to this little breakout through all of this at 80. And we worked our way up to 85 and came back and tested the low here and then broke out again. So I have a really hard time thinking that this area and anywhere from the 80 to $85 area should be support. The low that was made here, let's go to the daily. The low that was made here was on a down $5 day, where we then turned, I guess this was, this is the 8th. So that was a Thursday. The 9th was the Friday. Okay. And it looks to me like on the daily, it's moderately oversold, but when I put the Bollinger Bands on it, we're nowhere near it. I mean, we were very close to it here. And this one has really tended to not violate either the upper or the lower. Steve, do you know what this is, the Bollinger Bands?
I do.
Okay, if you know, if you have any questions, I'm not trying to talk either above you or below you. You know, feel free to jump in. So, you know, this is one that rarely violates it. And so, you know, that just lends that much more credence. And frankly, the lower Bollinger Band down here at 77.20 is really not much of a support when we're up here at $85. So as far as my thoughts on this for those guys is, I think, you know, with an $80 bid under the market, which is what they said, in that case, 1 second, admit, John. Okay. That should be, okay. With that $80 floor, I mean, I could see there's a lot of supply up here at $90, actually at 88.70, or let's call it from 85 to 88. There is some supply. So I'm just not sure that we've seen the bottom on this. But, you know, the bottom line here is we're coming into the winter. And regardless of what they say, they've gotten arranged in the EU. I cannot believe that everything is going to fall into place for them to not have a problem. I mean, clearly, I think they're going to have a problem. And so, you know.
That December 5th date is just such a black cloud.
Oh, yeah.
Hanging over the market. You know, I look at it, my chart, and we're right back to the 1-year VWAP where it's perfectly holding the 1 year VWAP at this point. So everything I look at, from the VWAP to what I call a V score, or what is fair value based on VWAP.
Yeah.
It's fairly valued here. It's holding VWAP perfectly. I see I see support.
And
And even Yellen said expect higher oil.
right.
Yeah.
The other thing is that oil does not live all by itself. We have the distillate market. And although the heating oil was down dramatically this week, for the first time, it was the one that hasn't been moving with the oil. You know, gasoline went from $4.32 to $2.30. So, you know, you're talking about a 35% decline in wholesale gasoline prices. And up until the end of this week, and I have a thought on that too, up until the end of this week, the oil had, the heating oil had come from, let's call it $4.50. Last week it closed at $3.57. So that's $1. That's only a 20% decline. And then of course this week it just collapsed all the way down to $3.12. So you know, that puts it kind of in the same area. But the reason for the drop here was the railroad strike, because heating oil and diesel fuel are essentially the same thing, or price-wise, they're essentially the same thing. And so I wasn't surprised to see that drop. I was surprised to see it as extreme as it was, because frankly, we had a cascade from Monday at 366 down to 311. So 50 cents or 60 cents, that's in and of itself, those 3 days were 16%. I mean, you know, when something is only down 15%, you add 16% to it, literally in 3 days, it, you know, it makes it look the same. But the fact is, first of all, I don't know if you put it up, Dale, but somebody put up a story about the fact that the railroad strike may in fact not be completely settled. They haven't voted on it. The management has still not given them any paid time off. They can get time off, but it's unpaid. And so really, what does that matter?
Yeah, from what the article indicated, is there's a number of groups or union groups that are part of this, and if just one says no thanks, then it's off. So
Right.
we'll know Thursday. At this point, it looks more probable that they're not going to take the deal than they are going to take the deal.
Yeah. Well, and so my point is, between heating oil and gasoline, which could easily have you know, a bounce here, this becomes the tail wagging the dog. You can't have higher distillate prices without seeing a rise in the feedstock for it. And so I think that that is also going to add a little bit of support under it. And, you know, frankly, this is the heating oil. I mean, this is an area of some pretty impressive support after the blow off high. I mean, this was 467. You know, we're down here at 320, and, you know, I don't care where it closed on Friday. I mean, I do, but You know, here it closed at the low on a Friday and went from 318 down to 314 and turned right around and was, 30 cents higher 2 days later. So, I think between the issues with nat gas, gasoline, and heating oil, I think that the oil, there's enough demand for the oil that it really could easily hold here.
I would agree.
Yeah. What is that? I haven't put anything on here. What are the fib levels in the oil?
Let's see if there's anything really. Let me do it real quick.
Okay,
I'm just using CL. I'm just using /CL. So,
right.
bum, 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 bum. Do you want me to share
Yeah,
my screen yet? Yeah, let's do that. And I will do, let me see, host disabled participant screen sharing.
Huh. Okay, let's. I don't see screen share. Multiple participation. There you go. Try it now.
All right, let me see here. Here we go. Entire screen. Where is it at? Blah, blah, blah. I'll just do this. You guys see this?
Yep.
All right, so we're in TOS now. And I like to use volume profiles. So I'm just looking at a 1 year volume. Let's make sure I'm looking at a 1 year volume profile. 2 year. Let's go down to a 1 year volume. Well, I'm gonna stay with 2 years so you can see it. But this is what I was talking about, Cam. So this is actually a 1 year volume profile. This is a 2 year on the side here, but there's a value area high, value area low. You see how nicely it's moving between point of control, value area low. It did go up high. This is my 1 year VWAP though, anchored to the beginning of September of last year. And it's just holding it so nicely right there. And this is what I call, it's called V-score. And the V-score is looking at the volume profile, but it's looking at it in deviations.
Right.
So here, right, we got above a 3 standard we got a 3 deviation off of the VWAP, the 1 year, the one that's anchored to. This one is, yep. So this is back to September of last year. So it's staying in its volume profile, but this is telling me that based on this, it's fair value here.
Right.
Just sitting right at it. It's not at any standard deviation. But let's do the fibs real quick. So let's remove my studies. I like to remove studies when I'm doing this.
Right.
Remove my studies. All right. So now we've got a nice clean chart. I'm going to collapse all of you guys. So we'll just take a high to low. And it looks like we're at about a 50% retrace.
Right.
So we'll just go low to high. Okay, we almost got that 618, which is ideally what I would look for on a retrace move of 168. So then if we did this, drawings. So if I'm going to start looking for extensions of this retrace, anybody got a guess? 120, 1272, 132. That's pretty extreme, but I'll be looking for, that's where I'll be looking as an extension of this retrace of a 1272. Don't have to get it, but 100% would be 121. So 132. So that's what I would get initially. And if there's any bigger things here, let's go back 5 years. I take just the major low to high. No, I don't get any confluence in fib levels here,
Yeah.
so nothing really, nothing major here. But we got the 618 retrace, which to me is textbook retrace.
Right.
Yep.
Looks great.
Yeah.
And, you know, when I look at some of my charts in things like the UCO or the USO, which is the which is the straight oil fund, but not leveraged like the UCO is, you know, we're getting towards, in those, we're getting towards oversold in here.
Yeah.
And so that just, you know, gives it that much more support under the market.
You know, the other thing I think about when I think about these things like energy, even the financials at this point, and I read articles over the weekend and say, people are saying, where should I go? Where can we go? Where can we find, you know, something positive? And I'm just reading so many articles that certainly say that, well, you can't deny energy, but maybe start looking at the financials too. And just makes me wonder if people are going to start moving into those sectors just to be somewhere.
Yeah.
If tech's not working for them, or if other areas that they commonly trade
Yeah.
are not working. So yeah, the other thing I was reading is Cocoa has some interesting activity on the COT report.
Okay.
And then the USDA, they're expecting it to reduce the yield numbers again. So, you know, probably see increase in this is mainly corn and soybeans, but yeah, I'm seeing a lot of activity in cocoa.
Yeah. And 1 second, let me just, the thing with the cocoa is, it's in the same area. It's produced in the same area that the coffee is.
Mm-hmm.
And it's severe drought. The other influence here, and I mentioned it in my comment in tonight's letter on the coffee, is all of these markets that trade internationally in the reserve currency, really, the fact that they're holding up with the dollar moving so dramatically higher. I mean, this was kind of interesting. If you recall, I was talking about this as a Head and Shoulders top, but this was not it. This is a new arc here that I put in today, because first of all, it came right back to the breakout. There, and here, and then turned back down. But, you know, the fact that this is holding above $2 and it has moved literally from under $1 all the way up to 260, the fact that it's holding 20% under the highs with $1 that has moved so dramatically higher says a lot about some of these markets. Here's the greenback.
Yeah, coffee
mean,
is so high above its 1-year volume profile.
Oh, it's unbelievable. But, you know, I drew this big W here and just was so negative. I was still negative, and only more and more negative as it went up, because traditionally the methodology, or let's put it this way, the preferred methodology, when you have the size deficits that we have, is to settle them with dramatically deflated dollars. And here, because the rest of the world is in such crappy shape, you know, here we are going from, the breakout here at 94 to 111, 110.78. I mean, the fact that gold isn't 1400 surprises me when I look at just the dollar.
Hmm.
Because, and I mentioned this in tonight's note also, while there are periods when the dollar and interest rates can move in the same direction, it's not all that common. And so, when I look at this and I see this kind of a dramatic rise and pretty much letter perfect for technical analysis, breaks out, runs up, consolidates back to the point of breakout, runs up, sideways consolidation, back to the point of breakout. I mean, it's rinse, repeat, rinse, repeat. And it's just been phenomenal. I thought when we broke here, this little uptrend line, I thought, wow, and on this one, this is the old Dick Donchen rule. Steve, if there's anything you want to ask, Dick Donchen was the technician early on from the same Edson Gould, Larry Williams era, which was fairly early. And he said, Donchen always said, the only thing that he uses to tell whether we're in an uptrend or a downtrend is the 5 and 20-day moving average, which is why you see it on all of my charts. The 5-day is this purple line, and the 20-day is the blue line. And it looks like we're about to cross below it again, unless, we have another big up day tomorrow, which, I don't know one way or the other. It's, it's a pretty strange market when the only reason that the dollar is up, because fundamentally it's really in a crappy position. The only reason that it's up is because everything else is down. I mean, the euro is 65% of the basket of currencies. And the yen is also, a really big number. Where is Euro FX? It's trading right at par. But I mean, look at this is a daily chart. This is just February. In February, it was 115. Now it's been as low as 99. And I don't see much of a reason for it to turn. So
It's interesting, Cam, because I think back going, to 2019 or even 2018, when frequently you and I would mention to people like when we saw issues in the repo market in 20,
right.
20 was that 2018, wasn't it?
Yep.
Before the Christmas crash. So it could almost become a broken record where we say, yeah, things are a little bit different this time, or it's hard to say, but right now, the question is, how high can the dollar go? Well, I'm just wondering if the bond market isn't front running the Fed, because we are now in such a different place than we have been in the last decade or more. And bond market saying, okay, let's just get out now and go park it in cash. So how high could the dollar go? I don't know. How big is the bond market?
Right.
And how much, where else can you go? Unless
and
you're everybody gonna go into municipals or something.
The 210 was unbelievable this week. I mean, last week it was, I think, 23 in that neighborhood. And this week at the close, it's 40. The 2-year is 385, was up 29 basis points this week. And the 10-year is 345, and it was only up 12. I mean, what I find interesting is the fact that I look at the bond market and I think about what the Fed's doing. And frankly, they've done a great job in the area of not hurting the market, not breaking the market. Because what they did was they talked it up before they started to raise it. I mean, everybody knew they were going to raise it. Everybody knew that there was going to be the roll off and the balance sheet shrinking. And so while the 2 is 385, I wouldn't be all that surprised to see the 2 higher again this week, and not that much in the 30. I mean, the 2 to 30 is, well, the 30 is 352, was up 5 basis points. But you see, when you look at the structure, the 30 was up 5, the 10 was up 12, the 5 was up 17, and the 2 was up 29. I mean, I don't know anyone who looks at this, this economy and doesn't say, oh yeah, we're in a recession. And I
Right.
don't care how they try and redefine it, we're there and it's going to get worse. The question is, is it going to be, that's why the FedEx announcement last week was so dramatic. It isn't that FedEx isn't going to make money. That was pretty much a foregone conclusion. As far as the worldwide economy getting crushed, again, I go back to the EU and say, I can't imagine that everything is going to work exactly the way they want it to.
Does it ever?
Never.
Never. It never works out.
And
Yeah.
and so I think that some of those markets are pricing it in. I mean, it's just unbelievable. I mean, the strangest part about it is the Russia portion of it. I mean, if they in fact do turn it off and keep it off, things are going to get really, really rough.
Yeah. That's why I say that December 5th date, that is such a key date. I mean, we got all these dates, right? We got Thursday to find out about the rail strike. We got December 5th to find out whether or not Russia is.
And Wednesday, whether they do, 50, 75 or 100. I wrote on the in the Discord room this week. I was talking to somebody, I'm not sure, I don't remember who it was, but they were talking about interest rates and what they were going to do on Wednesday. And my answer was, if they had any guts at all, and they really think that they have to raise it, I'd go for a Sunday night raise of $1. And whoever it was came back and said to me, you mean they can do that? And I said, well, most devaluations happen on Sunday night at 7:00. They can do it anytime they want. And the fact is, if they did that, based on what they were seeing and really being dependent on the data, then yeah, they could do it absolutely anytime they want. And, the market would get pounded. And so what? I mean, look at last week. How many $1,276 moves in the Dow have you seen, Dale?
That's why I don't know if I posted it in the Discord, but to have a 2 standard deviation move, they don't happen very often. We just had one, so they know that they can happen, but it is an anomaly. But yeah, that was amazing to see when they happened, and it seemed very orderly, right? It didn't seem like there was panic with the 2 standard deviation, and the panic simply wasn't there. We didn't see the VIX go over 30. We didn't really see the VIX. I think maybe what, 27 something, I think.
Yep.
But when I look at the market makers are certainly expecting something for next week because the implied volatility, the IV expands considerably across all the indexes.
Yeah.
We go from an expected move last week on the NDX. On the NDX, right? The
Right.
NAS 100, whatever you want to
Right.
call it.
The Qs.
Yep. Last week we had an expected move of 374.95 on the NDX. This week with an IV of 29. This week we have an expected move of 457.44. So 374 to 457. So they've expanded the range considerably.
Yep.
And we go from an IV of 29 to 36, which doesn't surprise me because with the move that we got last week, the options were way underpriced. Right. The market makers screwed themselves with that. So it's clear they're not going to let that happen again.
So this is the VIX, and the fact that forget about, seeing it up here at 80. I mean, we can't get above 30.
Right. Yeah. That's what makes me uncomfortable. If me too. Say, I hear a lot of the talking heads out there saying, oh, look at the put call, everybody's short. I don't know if they necessarily are. And I would feel a whole lot more comfortable about that statement if I saw a VIX at 35 or closer to 40 than at 27. I don't know. I'm not seeing the panic.
All this past year and a half, we've not been above 34.
And the VVIX right now is at 92. So that tells me the professional VIX buyers are not panicking. Right. I would want to see a VVIX of above 120 and it's at 92. So I don't know. Like I said, I'm hearing the talking heads talking about put call. My question is, or what I'm going to be looking for is I want to see what the put call is on Monday, because I think there was a lot of hedging that was taking place on the part of the market makers. And I'm just curious how much of that put activity was actually the market makers offsetting, right? Trying to stay delta neutral.
Yeah. By the way, on my market lab, which is, I think, page 4, I always have the S&P and the CBOE put call. And I was amazed last week when the CBOE was down so hard. This week it closed at 81, up 29. 29. Yep. And the S&P 150 up 14. And so, the other thing that I found to be particularly amazing was the range on the S&P this week. I mean, it's up a little tonight. But how many times do you see, last week I was talking about, let's go back to here. This is tonight. This is last week. This is the week before. The week before, I was all excited because we had come down to a lower low and then moved up and closed on a higher high, an outside week. And you really don't see many of them. But then this week, we go a higher high and a lower low and close at the bottom. I mean, this is a $322 range on the S&P. And the S&P is, well, let me just take a look at something here. 322 divided by last week's close of 40.85 divided by 40.85. That's a 7.9% range on the week. And look at the volume. So Well, part of that volume was Friday. The volume on the NAS on Friday, which has been running between 4.2 and about 5.4, traded 7.1 billion shares on Friday. But that was all the expiration stuff. Because
Right.
even though we haven't closed the quarter yet, as far as the futures and the options go, we have. So, but I really, right here, I could see it $100 higher or lower this week and not have it be meaningful.
Well, they're looking for a 100 on the SPX, a $116 move.
Yeah.
That's just a standard deviation.
Right.
So well within expectation at a 28.8 IV. That's a pretty high IV for the indexes. So yeah. But here's the thing that was interesting. So even though I noticed all the ranges and the IV, like I said, expand dramatically across all the indexes, it did not change at all on TLT.
Right.
And I'm always looking for, because we talked about bonds a little bit. You mentioned 30s, you mentioned 10s. When you say we'll go somewhere in the middle and go TLT, but it just surprises me that there's no change in the expected move week over week on TLT.
Yeah, and even though, 1 second, even though, here we go. Let me just reverse the colors here so that it makes it a little more legible for you guys. This is the daily. So basically what we did was we traded down and through on the TLT, down and through the lower Bollinger Band, and then closed, looks like about 3/4 or 5/6 or so up on the range. Even though on the weekly, it's just riding the lower Bollinger Band lower. But here, this is my on balance volume and 75-day linear regression, which for anybody who isn't familiar with it is just a 75-day revert to the mean. When it gets this far oversold, I look at it and I see this is about as far as it gets overbought, and, so I kind of key off that when I want to. But yeah, the TLT for the week did absolutely nothing.
Yeah.
And again, between the 10 and the 30, we were up 5 and up 12. So, pretty much they're pretty close to the same price. 345 for the 10s and 352 for the 30s. So somewhere in the middle there. And, there could easily be a trade here. But, the problem with this market, and it is a problem, is the fact that it doesn't line up exactly, because there is the TLT, as you pointed out, is the 20-year. So you can't trade the 20-year and expect it to be point for point. And the other one, TBT, is the short side also of the 20-year. Isn't there I'm trying to remember. I thought that there was something. Nope, even the TMF is a 20-year, and that's the 3 times leveraged. So I don't worry.
Oh, you mean something representing one of the other durations? I don't know.
You would think that now that they have products like multiple leveraged on individual stocks in both directions, you would think somebody would sit down and say, let's do something that makes sense for the bond market.
Mhm.
It's the biggest market that we trade, with the exception of Forex. And so, I mean, I can't imagine that they're arguing about whether or not to let Grayscale take their Bitcoin trust and turn it into an ETF. And they won't give us a product that makes sense in the biggest market that we have.
Agreed. Yep.
Okay, so for Russ, let's just go over this S&P chart. This has been a terrific one with the fib levels. This goes back, let's see how far back it goes. Yeah, this goes back to the March low. March low through the January high, or the end of December high. And the numbers here are really dynamic. I mean, this is a classic chart. You know, we have the horrendous move here from 3,400 down to 2,200, which was the COVID-related sell-off. And then we have essentially a measured move to about here. And then we have a little melting up, coming back down, higher down, and the blow off followed by the reversal week. But look at where it stops. I mean, we go to the 23.5 fib level,
Mm-hmm.
and we just return on a dime. We come back to it, we come back to it, we come back to it, and then we rally to where? The point of the breakout. And then we have another measured move down to the 38.2, and we come right back up to 23.5, and then break down again. So on the rally, we go a little bit further. This is the rally that I called so perfectly and expected to end about here at, 4,050 to 4,150. And instead, we got to 43.27. But look at where 43.27 is. I mean, it's right essentially from the point of the breakdown again, and right under the 50-day and the 50-week. And we come back down. I mean, this is another one that without a lot of trouble could move easily in either direction, depending upon the news.
Yeah. I mean, I know people, I get the pushback in various discords, but if I stay with the idea of textbook retracing, I'm looking for that 618, which is that 3,200. But that's just me.
Yeah, no, I get it. And what's really funny, and you were the one who pointed this out weeks and weeks ago. When you went short the Apple
Mm-hmm.
and had a target of,
I played a number of them. It was kind of like I had spreads in the 130, 135 range. I had a number of spreads in there.
Sitting up here, looking like we could break out again. And I'm thinking about it, and it's 170. I think it was right around the 170 area where we were having this discussion. And I, for my life, could not have figured out how it was going to get to 130. I mean, I just didn't see it.
For me, again, it was just my fib levels just gave me a level of probability. I can't remember what indicator I was looking at that was showing me whether it was, momentum was telling me that, or the fact where did it exhaust. But yeah, I mean, there was for a number of, I think a couple expirations.
Yeah.
That I was playing spreads in that, 130, you know, 135, 125 debits, you know, debits, put debit spreads and
Yeah.
what
And
have you. Yeah.
I think my response to you was, there's no way it gets below 135. And boy, did I feel smart in here, having seen it go intraday to 132 and change, and then 3 days later back at 151. But there was another one that I used to trade all the time back in the bad old days, and it was IBM. And I'd be looking at the IBM chart, and the market would be roaring, and things look great. And I'd have, all of a sudden, I'd have, you know, an objective of, when IBM was, you know, 130 or so, I'd had an objective that I thought it could get back to par, but I couldn't figure out how it could do it, so I didn't trade it. And then sure enough, there was an announcement, or they did a crappy deal, or wherever, you know, I mean, if you're going to be a slave to the news, you're probably better off being a slave to the charts.
Yeah. You know, Apple
At
for
least
me
the
is
charts, you can see it.
Apple for me is such a hard one. I mean, I kind of gave up on Disney for a long time. I fought Disney and just
Yeah.
tried to short the rodent whenever I could, and it never worked for me. But you know, Apple, the two sides of Apple. Number one, I'm apprehensive about going short Apple because it's such an emotionally charged
Yes.
stock for the retail people. Everybody just, you know, it's kind of like, it's got to be a core holding, and everybody's positive Apple. But at some point, market dynamics have to take over. But on the other side of the coin, it is such a core element to so many funds that are out there, so many, you know, the ETFs and so on and so forth, that I'd say, well, there's got to be a fair amount of institutional involvement too. So, but yeah.
I mean, it was just an amazing move. And the hard part about it was, we were constantly hearing about all of the problems that everybody was having in China, but not Apple.
Right. Well, you know, I'm just looking at your chart, and the first thing I see is lower highs and
Right.
lower lows.
Yep.
So yeah, we get this big rally. Who's to say that we don't go below? I don't know. Maybe I should run my fib levels again and see
Yeah.
where Apple's going. But
I mean, look at this. It gapped to the downside, and of course, it closed it 2 weeks later,
yeah,
and immediately reversed.
yeah.
I mean, it's, you know, this was last week on the
Yeah.
12th. Last Monday, the stock traded 164, and on Friday, it traded 148. You know, people are so desensitized to these percentage moves from seeing the likes of GME, GameStop,
No, Bed Bath and Beyond, all of them.
or any of those meme stocks, where they've just become so desensitized. I looked at, I was long last week for myself, UNG. And I got out within pennies of the highs on the options. And I think that I made about 400%, which was nice. I mean, I paid 55 cents for them. I got 226 for them. So that's about 5 times. And do you know what the move was?
No.
Nat gas last week? How about $9.11 to $7.76, 135 basis points, $1.35. That's 26% in a feed stock, not in a company that reported terrible earnings or good earnings, or, you know, just $1.35. I mean, it's an amazing move. So What I really like here is, let's go back. Clearly, I like the silver. Gold is up 290, silver is up 21 cents. So on a percentage basis, it's still outperforming. Although tonight it's kind of interesting to see the copper and platinum and palladium all higher at the same time. 766 for the nat gas, that's down a dime. Nothing overwhelming, nothing going on really in the oil yet, up 40 cents. With a low of 84.80, so about unchanged. The stock futures are doing nothing. Down $1 in the S&P and up 25 in the Dow and down 36 in NASDAQ. The dollar is down a couple of cents. Bitcoin's down again. The bonds are basically unchanged again. So, I'm just not sure where to go with all this, but I really like the gold in here to catch up. Oh, by the way, the gold to silver ratio, which we discussed not this past week, but the week before, when it was almost 98, it was a solid 97. Historically, it should be, well, what it should be doesn't matter. But traditionally, when we were allowed to own gold again, it was 35-1. It has hung around when the Hunts were trading it and gold went to 850, silver was $50. So that was 19 as the ratio. And since then, it's mostly been hanging between 50 and 60. So 97 was pretty high. It went down 5 the first week, or 4 the first week, and this week it closed at 87.1. So it's gone from 97 to 87 essentially. And I think, we'll have these little reversions to the mean. But here's what I like about the gold. First of all, it's in a great channel. I mean, this is the daily. It's in a terrific channel. We had the big move down on Friday, followed by the reversal back to the upside and closing up on the day. We also have the MACD looking like it really wants to roll back to the upside. And I think that the commitment of traders report showed that the professionals were back in control of this market, which is generally a good thing. So the issue becomes bottoms here at 1695, 1690, 1699, and a blow through here. So, it could rally $20 or $30 and still be a short. But I have the feeling that we're going to roll a little to the upside here. I mean, things are really dramatic. What I noticed about the gold this year is that as opposed to an inflation hedge, it's generally moved a lot easier and faster based on the war, which is, the oldest of problems that gold has been a decent investment during. I think this thing with the oligarchs disappearing, only 38 of them, the fact that people are beginning to talk about Putin needs to be out. They've turned him into a cornered rat, and I'm a little concerned about that. And so, I think it would be hard if he did something stupid. It'd be hard to hold the gold down here. I think really below 1800, way back up here. And the reason that I'm playing it is I am specifically going to play. Let's just go back here. Share screen. The last time I liked this was back here in July. This is a weekly. And I really liked it. And so what did I do? I figured if the trend is changing, the minors tend to outperform 2.5 to 1 when the commodity is trending. So I looked at it and I said, hey, it's down here, bottom Bollinger Band, right at the lows, looks pretty decent to me. And what did I buy? Newmont. Pretty much right here. And then they had earnings. Newmont has gone from 85 to 40. This is 5 months. This is the premier miner, gold miner in the world. It's dramatically oversold, but I'm not playing it again. I am going strictly with the GLD, which is also oversold, which is also on the lower Bollinger Band, and on the daily, looks like it's trying. Would I be satisfied up here at, what's this number? This number is about 159. This up here is 161. So I'm looking at the October 160s, and they're 75 cents. And, that's probably what I'll do. I'd like to see it, I'd like to have the opportunity to buy them about unchanged or slightly lower tomorrow. But that's definitely a trade I want to make, and I am not making it in the miners. I'm just absolutely strictly following. I mean, you look at some of these things and you see the move in copper. The move in copper was great, but the move in Alcoa was much more dynamic. And, you have to realize Alcoa is not just aluminum. All of these companies like the Newmont, they have assets, they have equipment, they have proven reserves. There's 100 reasons why they should outperform. But frankly, I'm just going with the easy way. Anyway.
Yeah, I'm
Yes, sir.
looking at my silver chart. To me, the gold chart, when I look at volume profiles and what have you, are not as clean. I'm seeing a lot of good basing activity. I can show you what I'm
in the SLV or in the actual silver.
I just did SI.
Okay. Oh, SI.
Silver futures. Yeah, I just did silver
okay.
futures.
I thought you were using SI as in.
Oh, I'm sorry. /SI. Yeah.
It's interesting because it's Silvergate. It's the bank that what's his name, Saylor from
Oh yeah,
MicroStrategy uses for his Bitcoin loan, and it really moves fast, and it moves with the Bitcoin, even though on the downside they're dramatically protected because it's a decent bank. It's worth about $50, or it has $50 in cash, and the leverage on those Bitcoin loans are 5-1. So they really only have 20% of the downside. So, okay, so I'm looking at the silver.
Yeah, so I will say I don't see the name. So if anybody's got questions on like this stuff, if you're not using volume profiles, please feel free to jump in and ask. But so this is a 1-year volume profile on SI, the silver futures. The thing also, when you notice up here, we got a very positive ADX right now at 22. So we are positive momentum on this, but it's built a nice base down here. Right. So here's your point of control for the 1-year volume profile. That's where your volume's at. That's going to be a magnet, or it can be a magnet. Value area high, value area low. So we're below the value area low. It's built that base down here.
And an extra little W.
Yeah, exactly. That W. Once again, based on my V score, it's undervalued. I'm showing a trend moving up. Right. I need to see this red line break through the 0 line.
Yeah.
It tried and failed. I would want to see it break above and the fast stay above on my trend oscillator here. But I mean, we're kind of at that inflection point, but I like where it's at. But
I
interesting.
like seeing, that's one of my favorite things, is seeing a flag like that.
Yeah, definitely. But here's the interesting thing. You see where it's building this base on the 1-year profile. If I go back and I do a 5-year profile, just to get a bigger time frame, a 5-year, look where that point of control is.
Wow.
It's right at its 5-year point of control is where it found that support, right back here. So like I always like to say, if you want to know what can happen, look to the left and it'll tell you, because there's the volume over the last 5 years. So there's a big volume base sitting here as a 5-year point of control. It got way outside the 5-year volume profile, right? There's the high, but it kind of tells me that this is an area of support for it.
Yep. I like it. All right, folks. I think that's about it. I will have this converted and put on YouTube, and anybody who wants to see it, I'll post it in the Discord room, and maybe I'll include it on the if it converts fast enough, put it on the body of the letter email that'll go out in probably about an hour and a half. So
excellent.
Welcome, Steve.
Thank you.
My pleasure. If you have any questions, you know where to get me, and I will see everyone tomorrow.
Have a good night, y'all. See you in the market.
Bye.